Hi, I'm James Nelson, partner at Massey Knackle Realty Services, and I'm here to bring you the June 2013 Nelson podcast. In this edition, I'd like to talk about 421A certificates and the Inclusionary Housing Certificate program. We actually just did a panel at REBNY a week or two ago where Saul Archer, president of the Archer Companies, a large affordable developer, along with Alvin Shine from Sidon & Shine and Paul Korngold from Tuckman Korngold, spoke about benefits to market rate developers. Now, although the negotiable 421A certificate program was canceled 2 years ago, there are still grandfathered certificates that exist out there, and although very few, we estimate now probably less than 2,000 certificates exist, but they do give great benefit, especially in the outer boroughs where you get a 15-year abatement versus the 10-year abatement in Manhattan. And one of the things that Paul Korngold brought to light is that if you look at the benefit over a 10-year period, it's about $71,000, whereas in Brooklyn it's about $174,000. So if you look at, what is that worth in today's dollars at a 7% discount rate, that's really $53,000 of value for the if you used in Manhattan, and about $75,000 for Brooklyn. So the fact that these are trading at about $40,000 a certificate makes a lot of sense. At this event, a residential broker spoke up and said, look, these certificates are also very valuable for end users when buying condos, because they look at what their carrying costs, and with the reduced taxes that allows them to take on an additional mortgage, to borrow more and ultimately pay a higher price. They also said it was a great selling point versus other projects that do not have the 421A. So again, for market rate developers who are looking to do projects, makes a whole lot of sense for rental, especially in the outer boroughs, and also for condos. And again, the way these certificates work is they apply to, you need one for each unit in a new development. The units have to be 1,200 square feet on average or less. Now, there are still areas where you get the 421A benefit as of right. They're outside the exclusion zone, so we're talking about in some of the far-out neighborhoods in Queens and Brooklyn. But for those looking to develop in those areas, you can get the 421A benefit as of right, as opposed to having to buy them off-site. With respect to inclusionary, Alvin Shine had led that part of the discussion. He explained how inclusionary that's produced off-site can be moved towards market rate projects that are in R10 or equivalent districts. So these have FARs of 10 that you can bring up to 12. Saul Archer talked about, he goes out, he creates these affordable sites in the community boards. He gets a bonus for every square foot he builds. He can transfer 3.5 times to an R10 project. Some of the zoning districts that have a lower FAR, he only gets a 1.5 times multiple. So he's making the case that in some situations it doesn't even make sense to do it. But these inclusionary rights trade for about $250 to $350 a buildable foot, which, when you look at the fact that land values, we just put a site in contract for over $800 a buildable foot, is really a bargain, especially when you're taking these rights and you're putting them to the top of the building, where in some cases these condos can sell for $3,000 a foot. So the inclusionary makes a lot of sense. Alvin Shine also talked about the benefit of creating inclusionary on site with an 80-20 project where you're going to have 20% affordable. And he said the benefit there is you get the triple dip effect, where you get not only the 25-year tax abatement, you get the increased FAR on site, and you're able to transfer these inclusionary rights off site. So it can be beneficial, but he said that these really only qualify for larger, or make sense for larger projects, because of the cost and the time it takes to do this. So, that's really what we covered from the inclusionary and the 421A perspective. In all, I think one agreement, and we heard this comment from a developer in the crowd, said, look, it's really a travesty that they did away with the 421A negotiable certificate program. That's, again, where it used to be that affordable developers would build these units off-site. For every unit they created, they could take 4 times that amount and shift with 421A certificates. So now the fact that you can't do that, you're seeing a big decline in the amount of affordable development, and also it's becoming very difficult to build rental ground up because the real estate taxes, they can run 30–35%. So if you don't have that tax abatement, you're not going to build. So unfortunately, I think it's been very short-sighted by some of the politicians who've, they were saying, well, we're giving away too much tax abatements. Well, that might be the case in the near term, but down the road when these abatements burn off, they would have had a lot more buildings on the tax roll and a lot more affordable units. So I hope at some point the city figures out a way, maybe under the new mayor, to bring back the negotiable 421A certificate program, because it certainly was working, and again, we're running out of these certificates. So that's all I have for you for this month, and I look forward to being in touch. Thank you.